Welcome everyone to our new webinar. We're going to take a look at the North Atlantic market, what happened last year, what's happening right now, and what do we see as the main trends for 2026. So I'm John Strickland, Director of JLS Consulting. I've had 43 years in the airline business, quite a lot of exposure to the North Atlantic market, both in network planning at British Airways, revenue management considerations at KLM, and with airport clients touching the North Atlantic market. So over to you, Louis.
Thank you so much. I'm Louis de Joux. My first involvement with the transatlantic market was back in 2008 as a network planning analyst for British Airways. After British Airways, I joined American Airlines for a number of years, including 6 years as head of leisure sales for the US market. Glad to be here.
Great credentials. Daniel.
Yeah, thank you for having me on. I'm Daniel. I've been in this business for over 20 years now and started off with on the airport side and the consulting side, but then moved to the airline side 2013, and then been here with airlines since then. First with Wow and then Icelandair, and then last time with last venture was with the Play. So I've been involved in the transatlantic market my whole airline career. Thank you.
Great. Well, I hope we can all put our heads together to bring some useful insight into this really globally important market. We're doing it alongside a new consultancy which has just been established by Louis, Reperio. So Louis, just tell us quickly about that.
Yeah, we want to put our passion for the Atlantic market at the service of our clients, and our clients are airports that want to grow new transatlantic services. But I also put my leisure hat on to help suppliers, hotel DMCs succeed in the premium leisure market in the US.
Great. So we're a good start for 2026. Yeah. So we'll turn our minds now to the issue at stake. We're going to look, as I said, at the North Atlantic market, both last year, current and future. Let's kick off. I mean, certainly last year we faced a lot of challenges. So there's geopolitics, government shutdowns, you name it. Just talk us through some of those, Louis, if you want.
Yeah, what a year it's been. Liberation Day was probably the most relevant and dramatic event that happened. I'll take an example. The Delta stock price lost half of its value in the aftermath of Liberation Day. It's still regained. It's now back up above where it was a year ago, but very significant. We also had a government shutdown, ATC strikes in Europe, that's air traffic control. We had understaffing in the US as well with the Federal Aviation Authority, not enough air traffic controllers, which resulted in capacity cuts. And then in the US domestic market, there's been some challenges at the low end of the market, with one of the most dramatic events being the bankruptcy of Spirit Airlines, a leading ultra low-cost carrier. So it has been a hell of a year, and the headlines back in April were pretty bad, and we're forecasting a very doomy year.
Yeah, just continuing with that great cartoon representation of some of those themes, Louis and Daniel. I mean, that Liberation Day did spark in people's minds a big fear, didn't it, about US consumers as tariffs began to let rip almost on a daily basis in the news feed. Right. Was the US consumer going to be hit and not be spending the money? And as you said, I mean, the domestic market certainly has been hit in the US. We haven't seen that same effect internationally at all, have we?
No, that's right. And, if you look at the transatlantic market overall in 2025, it was an amazing year, actually a record-breaking year. If we look at the passenger number, we were at 37 million passengers between the US and Europe. That's an all-time record. And we saw a lot of strong bookings at the front end of the plane, the premium cabin being extremely high-performing. We'll spend more time on that a bit later.
Mm-hmm. And of course, Delta reported just recently their end-of-year results and their initial outlook for the year ahead. If they're a bellwether, they do show positive things coming out of last year, despite those challenges. Talking, as you mentioned briefly, and we'll touch again on premium travel, kind of quite challenging domestic conditions. They're not even anticipating growth in the domestic market in the year ahead, but they're investing heavily in premium development, long haul, and they've given the tag to the, they say, transatlantic market as a key part of that positive outlook.
That's right. And indeed, 2025, despite all of the challenges, was a top 3 year in terms of international profitability for Delta Airlines. I would put a caveat behind it. Delta is very engaged and over-indexed on the premium end, but that's really good. That's really good. But when you look at the quarters, it was a very, very complex story. I think Daniel's got a few more insights on that.
Yeah, thanks, Louis. As you can see here, there's a chart showing how the unit revenue across the Atlantic for these sort of North American carriers, as well as their sort of European airline groups counterparts, was developing throughout the year. And you can see that in Q1, it started out strongly. All the airlines were raving about the market. Bookings were strong for the summer, and they said the premium market was very strong. The economy, the back end of the cabin was stable. But as you can see, what happened in Q2, where you have the Liberation Day, things started to crack, and carriers start to report sort of softness in the market, especially again in the back end of the cabin, economy class, whereas they said the premium was going very strong. And then, of course, third quarter, it started getting worse, and you can see that they all reported negative or declines in unit revenues between the years in Q3. Again, premium stayed strong, but back at the cabin was very weak.
It's certainly interesting, that point, isn't it, Daniel? As you said, we've seen different comments by a variety of airlines about the economy cabins. Some have had more challenges in the US market, some in the European, but premium traffic staying strong. But if Delta's anything to go on, we're going to hear very shortly after this webinar on not only the fellow US carriers, but the major European groups. I think in particular we'll have our eyes on IAG, who had certainly in the first 3 quarters of last year very strong North Atlantic performance, very strong premium traffic. Air France, KLM, pretty good as well. Maybe not so much Lufthansa. So there's a lot to look out for, isn't there, in the coming weeks?
Yeah, it is. And it'll be interesting to hear what they have to say about each individual carrier, what they have to say about the market. And as you said earlier, Delta has reported, and they reported flat unit revenues in Q4. So they said the market is sort of stabilizing and a little bit recovering from the shocks of 2025.
So we start to look at the year ahead. We've got all these clues about what happened last year, and I doubt whether they're going to change dramatically as we move into 2026. But one of the key things, of course, is capacity. Capacity was quite tight last year. We hear airlines the world over in all markets talking about capacity challenges, late deliveries, in some cases more short-haul aircraft, groundings of aircraft with engine challenges. We've seen, even in the case of a couple of airlines, well, Lufthansa in particular, they've suffered from late deliveries of aircraft, which have definitely affected the transatlantic performance, or North Atlantic in particular. But they just said recently they're going to sell a couple of quite young 747-8 aircraft. The money they were offered by the US government to buy those planes was irresistible. That's probably going to put pressure again on capacity. So as we see on the slide here, a couple of statements suggest that capacity is not going to grow really strongly in the coming year.
That's right. Yeah, Daniel, over to you.
Yeah, no, it's correct. Delta said they're conservative on the capacity growth for summer 2026. As you can see there, United said last year after the Q3 results that they were going to be flat to negative, because they got a little bit burnt in Q3 2025. So it seems that the capacity discipline is the key word here at the moment on the supply side.
And on the demand side, we had really, really encouraging trends coming from the Delta call, saying that the revenue momentum, the booking momentum, has accelerated in recent weeks. As a matter of fact, they said that last week was the best cash booking week in Delta's history. So we're feeling pretty good about the year to come so far.
It's incredible, isn't it? You would have thought with such a big list of challenges, that would not be the most expected kind of statement. And Louis, we've looked also at some other sources of clues, haven't we, about bookings for the year ahead?
Yeah, and one of the signal that I like the most is Viking River Cruise. It's a massive company.
Louis, just tell me, what is the relevance of that? So, I mean, where does cruise traffic sit in terms of air transport? That's something I'm not so close to.
No, that's right. So for 2025, I expect close to 600,000 Americans traveling to Europe to get on a river cruise. That's very significant. That's close to 2% of total seats, or total demand across the Atlantic. And what we're seeing in this chart is the fact that Viking, the market leader in this segment, is already pacing at 9% above 2025. That's a snapshot that we saw in early November. And so that's a good sign that at least these consumers, which tend to be high income, high net worth consumers, are booking Europe. And that's a positive sign as well.
That's interesting. That suggests again that US consumers are still comfortable, as we see at this point, at least in the premium segments, with traveling and coming across to Europe. But what about the actual mix of traffic, Daniel, that we're seeing now in terms of trends between the European and the US market? We touched on geopolitics. There's so many different aspects of that, not least different views about change of government in the US, which happened a year ago. Democrats out, Republicans back in. You can't miss a headline day without multiple references to the current President Trump, and all sorts of impacts. What is that showing up in terms of travel patterns? Because we've heard again, especially in Europe, maybe people less keen to go to the States.
Yeah, that's correct. As you can see on this graph, this shows the number of visitors, either Europeans going to US and then US nationals going to Europe. And as you can see, that Europeans is still about 12-13% below what it was back in 2019, which was a high point before the pandemic. And you saw a 5% decline in 2025 versus 2024. So we don't expect that to change. At best, the European will stay the same. I would say probably gonna as I said, gonna be flat or a small decline. Of course, we never know what's going to happen in the future, but I'm fairly sure that geopolitics will play a part in how the European side of the market will behave. On the other side, you see that the U.S. nationals, they have been going from strength to strength over the years, and they are now 22% above 2019 levels, at 23.3 million visitors to Europe over the year. And there was also about 5% growth year on year there, and we think that the US is going to be leading the growth there because of the difference in economic strength. So last economic forecast for the US show 2% growth, real GDP growth for US next year versus 1.3 to 1.4% for Europe. As well as, if you see the growth of the US carriers, they are very much going into markets that are US point of sale concentrated, or majority catered to the US nationals. So
that's right.
I think that's going to continue to grow there.
And that's got really big consequences on the transatlantic markets and for airports in particular. And we'll see the destination mix is definitely changing rapidly.
Absolutely. I mean, I think what we see is it's a stark contrast here. Pandemic, government change, the US still marches on with numbers going up, the strength of the US consumer. Europe, the pandemic hit everybody, but Europe seems to remain very clearly in the doldrums. If we went deeper, more granularly into this data, we would certainly see that there are very big differences between European countries and their willingness to travel to the US. And in some ways, there's a degree of correlation that the more sensitivity in the relationship of a country in Europe with the US, the less we see willingness to travel there.
Yeah, correct. We see Eastern Europe is still, there's a growth there coming through. Eastern Europeans going to US, but most of the sort of Western and Northern Europe is declining. Interestingly, we see some strength in Spain and Portugal. I think that's very much driven by the capacity that has gone into those markets, direct capacity to US. So it's a capacity supply-led growth there. But yeah,
That's certainly very, very interesting. Let's just come back to the theme of premium travel. We talked about that. We heard Delta talking up again. We've seen here the last reporting in Q3 for Air France KLM. They've talked a lot about investment in premium capacity. Lufthansa's trying to do the same, albeit they're having some problems with certification of their new Allegro seats. IAG again, reconfiguring aircraft. They've had a relatively new club product. They're going to reconfigure their A380s starting from this year. It's all about premium, isn't it?
That's right. And we're seeing some pretty amazing configuration. You mentioned the BA A380, which will have 110 business class lie flat seats on board, up from 97. We're also seeing American launching a 787-9 with 51 suites. United is going all the way to 64 lie flat seats on their 787-9. So we're definitely seeing an increase in that premium demand. I also think that the Air France La Première is a very interesting case study. First class across the pond used to cost about $12,000 to $13,000. We now at more than $20,000 for Air France La Première. And I hear it's selling very well. So that's really the ultra luxury segment of the market. People who can afford a hotel at $3,000 a night. And indeed, I think Air France has done a really, really impressive move with the refurbishment of La Première. And I believe Lufthansa Group with his Allegris cabins is going to do very well as well.
And you can see it here as well there. Sorry, John, just to chime in there. So you can see there that the KLM is adding the premium comfort, which is the premium economy cabin of the aircraft, and that's actually booming. All airlines have publicly said it's the most profitable cabin in the aircraft. So they're sort of catering to the low end premium as well as the high end premium.
Yeah,
I mean, these things all have long lead times. Changing cabins is not an overnight exercise. It's weeks, if not sometimes even a month or so long per plane, given the complexity of changing seats and all the wiring and so on that goes with it. It's not something you can get out of easily.
That's right.
So once that decision is made, if there was some change around and it became much more driven about price-sensitive traffic, airlines would find themselves in a difficult position. But we don't see any signs of that at the moment.
That's right. And actually, the configuration that are coming out right now, for example, the American Airlines 787-9, that decision was made years ago. And so you have to admire the planning that came into that right alignment.
And let's move on and look also about the kind of mix of capacity. I mean, we've talked about the major US groups, the major European groups. What was worrying some of them, I mean, certainly up until early days in the pandemic, was the rise of long-haul low-cost, particularly Norwegian, which grew as a pretty sizable operation. And then in their own restructuring, they got out of that market, only to be replaced by North Atlantic buying or acquiring on better lease deals most of Norwegian's fleet. Then Play, of course, developed in Iceland with a one-stop product via Keflavik to and from USA. But Play has now gone completely as a business. North Atlantic hasn't made money to this point in its life. And on a fleet of 12 aircraft, has now leased half of them out. So to Indigo for Indian market use. So what we've seen is those kind of niche or certainly long or low-cost carriers, that capacity has been disappearing. But it doesn't mean that nobody else has been having a go at adding capacity. We've actually seen some interesting new entrants appear on the scene for this year as well, haven't we?
That's right. Alaska Airlines, which our European audience may not be fully familiar with, but Alaska Airlines is a large operator in the US. They recently merged with Hawaiian Airlines. They got some wonderful, beautiful 787-9 as a result. And they're going to make these planes point east to Asia and west to Europe from their Seattle hub. They are launching Heathrow as well as Rome on the 787-9 and also Reykjavik on their 737. So that's a new entrance. And I think that really talks about the fact that US airlines want to be in Europe and want to offer that global network, which is critical for their frequent flyers. And we know that the frequent flyer programs are an increasingly important part of the airline success.
Yeah, I mean, airlines talk about the profitability of these frequent flyer points because they sell them, don't they, basically to other partners, get guaranteed
That's
revenue.
right. And mostly they sell it mostly to their co-brand credit card partners. So Chase and Bank of America buys billions of miles to the different airlines. And these deals are probably the most important deals that airlines sign. I would say even more than an aircraft order. For an airline to sign a deal with a big bank to launch
I'm going to encourage you to come back to that point in a minute, Louis, because
right.
I wanted to touch on something else, but I think that's a good point to return to. Also, just focusing on the market dynamics, we're seeing something that began really in the last year and is continuing this year. US carriers flying to more Southern European, in particular, leisure points in Europe, places that we would all, as Europeans ourselves, be familiar with people going north-south in Europe, down to the Mediterranean, to the Greek islands in the summer. We weren't used to seeing American carriers turning up to these kind of destinations, but we began to see them putting a toe in the water last year, and that's continuing, isn't it?
That's right. Santiago de Compostela was not on my bingo card for 2026, but here we go. It's actually a very smart use of the capabilities of that plane, the 737 MAX 8, which mostly does domestic runs in the US. So being able to fly there because of the range, the distance, is pretty remarkable. And actually, kudos is really due to United Airlines, which has been developing a very innovative, aggressive network strategy. And they've really started the expansion to secondary or even tertiary European airports. All of them.
Just to jump in, Louis, do you know the backstory on that? Because I seem to remember there were one or two routes announced, in my memory, maybe to Portugal last year by United, that were cancelled before they began. What happened there? Because it doesn't seem to put them off continuing this year.
No, that's right. And I mean, you've seen the numbers of Americans. Americans love traveling to Europe, especially after COVID. People want what we call a Euro summer here in America. And Southern Europe is now extremely attractive to Americans. I believe that the show White Lotus, which second season took place in Sicily, actually had a significant impact on demand. Shows like Emily in Paris introduced Gen Z to life in the old continent. So it's pretty remarkable. As a matter of fact, speaking of White Lotus, the fourth season will take place in Saint-Tropez, which is an airport, which is a city that you can reach from Marseille Airport, for example, and that's really good for traffic going forward.
Interesting. Really now, one of the strands I think that is important. Daniel, so did you want to come in there?
Yes, I was just gonna come in here saying, like, it's interesting to see how this develop going forward, because you heard like BA or AIG saying it in the Q3 results last year that they were seeing some pressure on transfer traffic from in Heathrow because of this direct service to secondary airports. So of course that pressure is just going to increase in 2026. So it'll be interesting to see if they continue to complain about this, or not complain, but sort of mention this as a reason for any softness. So yeah, it'll be interesting.
That's right.
It's a very good point, because there's two angles to that. I mean, if you think of IAG, they stepped into a wider variety of European leisure routes to compete with low-cost carriers in the local European market more and more in recent years, with BA in particular. But as you said, they also get a lot of connecting traffic through, particularly Heathrow, from the US. So, which way is that going to play out for them?
And there's definitely a consumer preference by US customers to transfer at the US airport. I think the security process in Amsterdam, Frankfurt, Heathrow, the liquids, that freaks out American travelers. And so I think we're going to see more of this type of routes. And actually, the fleet that are coming are going to make this this even faster. I think Daniel's got some stats on that, right?
Yeah, I was going to say that's the next key point. I think I was going to say we've seen that the 737 MAX, if you like, has trailblazed the last few years across the Atlantic, primarily with Iceland Air, who's got a sizable fleet and is operating many US points now with that aircraft, small capacity, lower unit costs. We had seen a little bit in the past with Norwegian. We're also seeing a bit in Canada, Canadian transatlantic services with Air Canada. And of course, the A321 XLR, people have talked about it being a game changer. It was being waited with bated breath by many airlines who'd ordered it. And we saw just the beginnings of that last year with Aer Lingus getting started out of Dublin to US East Coast. And in addition with Iberia, I think it was Boston, they launched out of Madrid. So tell us a bit more, Daniel, about how you see this going forward with these aircraft types.
Yeah, you're correct. Saying that of course the XLR just came in last year and sort of started to touch a little bit on the market, the transatlantic market. But we will start to see it really come into play this year and next year, because of course the US carriers are the ones who have 40, 50 aircraft on order, and they are taking deliveries of those aircraft this year and in the next few years. So you can see there, American was the first of the US carriers to take delivery of the XLR, and they will be starting using it on New York JFK to Edinburgh from March, if I remember correctly. And then of course, and then Air Canada as well is using the XLR to fly some secondary markets in Europe, leisure as well as main hub cities. So it's going to be interesting to see how the XLR will sort of.
I think another important point on this is that we've had America and United in the past flying small narrow-body aircraft, or smaller, particularly the 757, as indeed did Iceland Air. But these aircraft, they may be similar in size, but it's not just that, is it? It's just a step change in economics, because many of those routes were quite seasonal because they needed high loads, reasonable yields relative to the cost of operation. Possibly These aircraft could lead to extended seasons because their whole operating economics are that much better, with maybe on average a 20% plus saving in unit cost.
Yeah, and the carriers have talked about that it's not just open new markets, but also to extend the season. I think Iberia, they used it initially to extend the season on Madrid to Boston, and they used 330s in the summertime and the 321 XLR in the wintertime. So it's a game changer in terms of new routes, but also game changer in terms of managing seasonality and capacity and matching capacity with seasonal demand.
And there's a massive opportunity for airports on both sides of the Atlantic to fine-tune their business cases to ensure that they are in top position to welcome these A321 XLRs that are coming. As a reminder, Americans got 40 A321 XLRs on order. United, which has been very tight-lipped about their XLR plans, but they've got 50 on order, and I expect them to do some pretty wonderful things. So let's see where it goes. It's going to be very interesting to watch, and a great opportunity in the next few months for airports if they act.
Now, guys, we're coming towards the end of our webinar today, but Louis, I jumped in before when you were talking about banks in the context of loyalty cards. I think it's an important point to bring out again for the year ahead, and changes in this market, the dynamics of travel and who's influencing it. And here we come back to this point about banks, many of which banks, credit card providers are buying capacity for loyalty points from the airlines.
That's right. And yeah, John, everyone, I think, on both sides of the pond are familiar with airline frequent flyer programs. But what people don't realize is that the banks got their own loyalty programs as well. Chase Travel, for example, issues Chase points. And these are increasingly popular with Americans. Chase Travel, which is part of JP Morgan Chase, the largest bank in the US, has been growing at a 31% annual rate in the last few years, and they're no short of ambition. And so what does that mean for hotels, for destinations? You really need to be on these ecosystems. You need to have visibility of your destination, your brand, your airline, your airport on the Chase portal, on the United Mileage Plus portals, etc. So it's really changing the dynamics in the US market. One more trend that I'd like to address as well is a big comeback of travel agents. In the US, we are seeing a lot of activity there. Travel agents which are independent contractors but are associated with what's called a host agency. A famous one being Internova, of course, which airlines know really well. But there's also a new player on the block, Fora, which is a next generation platform for Instagrammers that want to become travel advisors, probably the best way to explain it. And they raised over $60 million in funding to grow that travel advisor, travel agent market. So that's pretty remarkable as well.
It just shows that for the airlines, they thought they'd got rid of, or were well on their way to getting rid of what they saw as the Frankenstein's monster. They created GDS. I mean, my vintage is such that I was there before they even had GDS. So I saw the beginning of that. And now we talk about NDC coming in. We've had direct bookings through websites, through apps, and personalization on phones. But they may yet rue the day that they talk about selling this capacity to banks and credit card partners if they end up getting the whip hand, as we say, getting the strength to influence that travel more.
That's right. Banks are important to airlines because they buy miles and they also buy tickets. So that's really an interesting dynamic. And I expect this to become increasingly important in the years to come.
Well, listen, I think we've contributed quite a variety of discussion points in our 30 minutes or so of chat today. So I've enjoyed talking with you guys. I just wonder what you would like to say to sum up as we face the beginning of this year ahead, Louis.
Yeah, I think there's a huge opportunity for airports to really be in the competition for these new A321 XLRs. And Daniel and I are excited to support innovative airports. I think US point of sale, US travelers going to dominate the transatlantic market. And so understanding how they book the demand patterns of the US market is increasingly important. And that's one of the key mission of Reperio. So we're excited about 2026. We're excited about our collaboration with great brands, great airports. And we are optimistic about the transatlantic market.
Well, listen, guys, thank you very much for a great discussion today. We'd really like to know what you think of this webinar. This is recorded. We are thinking whether we should come back to you live, so you can put in live questions. We'd love your feedback on what we've covered today, your comments, your questions, to engage in a further dialogue in the weeks and months ahead of what should be an exciting year for the North Atlantic market. So for me, John Strickland, it's bye for now.